Good evening, traders. Welcome to our class tonight. My name is Matthew. We will be going through a strategy called break line or the breakover trend line strategy. If you have any questions, please feel free to send it over on our chat and I will give answers. I'll try to give the best answers as possible. So the objectives of this session is to understand the trend line, the moving average and momentum, because those are the indicators or the tools that we'll be using in this strategy. Explain how price reacts in relation to these indicators, how to apply these tools to spot trade setups, and demonstrate some of these setups on the charts. Now, in this strategy, we want to see what a trend line is. It is where you have three touches giving you a specific pattern that the price is following. So in an uptrend, you're going to have an ascending trend line. So on a downtrend, you have a descending trend line. If you get more than three touches, then that's much better. Like in this case here, if you check, you have price touching this level and moving to the upside. And this red line is a trend line. If you can just highlight these levels, you have several touches that point there, here, and here, and here. So several touch points that give that trend line. You have several others like that one and that. So if it's a descending trend line, you can see in that case, we have one touch right from the top, another one. And at that point here, we even have a fourth one, and this is a strong downtrend. So you get one or two or three levels where the price seems to follow a certain direction. Then you go get your line, join those points, and you find the clear trend that the price is following. So this is a downtrend. Up here, this is an uptrend. When you're using a trend line to get all the two. The other tool which you're going to use in this setup is a moving average. This is an indicator. An indicator is a tool which you add and you do some setups, and then it is plotted based on the price information on the candlesticks. Mostly the closing price is used. So you can have a specific number of candlesticks being used or number of periods. Like for example, you might have 20 candlesticks or even 50 candlesticks or 50 periods. Yeah. When you go to the setup, you find it's indicated as periods. And you can set the method as either exponential or simple. Okay. That is going to specify the way that line is calculated or the way it is plotted. For example, when you say exponential, this is where you have the line being plotted based on the given number of periods, but then more weight is given or more weight is assigned to the most recent candlesticks. So the line moves much closer or reacts much close to the price than when you have a simple moving average, which just uses the average closing price without actually considering the most recent. That's a moving average. So it helps to show or to smooth out, to show the direction of the flow of the market, as well smoothing the price. And this is an example of how you can combine the trend line together with the moving averages. One challenge with the moving average is that they might not give a very clear flow of the market, but if you add a trend line, then you realize that even the moving averages themselves, they're not going past those levels where you drew your trend line. So the reason why you're combining the trend line with the moving averages is to filter the challenges you're going to find with each other, right? For example, the moving averages, you realize the price moves below it, but so long as it's not moving below this trend line, then you're still on an uptrend up until the point where you have the price moving below the moving average and still also moves below the trend line. That's when you can confirm that change of a trend or the break of a trend. That is what we're calling a break of a trend. Right from the beginning, the moving averages and the price all bounce on the trend line and they move up. All bounce on the trend line and move up. In the event of a trader who was using only the moving averages, and you see the short-term moving average, which is EMA 9 in this case, crosses below the long-term moving average, which is EMA 30. This could have signaled a change of a trend, but because there is this trend line, which still holds strongly, and the price is unable to break it, then that trader is able to filter out this, which could have been a fake sell signal, and still maintains on the upside up until you have the price breaking below the moving average and still breaks below the trend line and the moving average is cross. This is what signals a clear break of a trend. Let us check a clear setup for a break of a trend to the upside. And this is what you have. We're still combining our trend line, got 3 touches. If you get 3 touches, then it's much strong. The more the number of touches you get, the stronger it is, but also the closer it is to getting broken. Then you have a moving average, which is also showing a downtrend, but there are some cases where the price consolidates. So in this case, the trend line helps prove that we're still in a downtrend up until a point where you have the price breaks the trend line, the price stays above the moving average, and the 2 moving averages cross over to the upside. This is where you have a clear change of a trend to the upside or the break of this trend. These other cases, the price attempted to remain above the moving average is crossed, but again, the trend line held strong. So the downward movement resumed. Now, there are sometimes also you want to use as much proof as possible. So here we have the price maintaining above the moving averages, the price breaking the trend line, as you can see here. But you still need some more additional proof. So you want to add another indicator, which is the momentum. You want to prove, or you want to get another support on the idea of buying, such that the momentum is increasing to the upside. So you have the break of the trend to the upside. Moving average is pointing to the upside, price above all the 3, but also want to see that the momentum to the upside has increased. Same case for the break of the trend downward, you want to see that in addition to all these conditions being met, price breaking the trend to the downside, moving average is crossing over to the downside, and the price maintaining lower, you still want to see that the momentum to the downside is strong. So we use another indicator, which is momentum indicator. And this one is going to give us the pace of the price of an asset It's a leading indicator. It can help the trader to tell the potential shifts in the trend. And that can help you with more confidence on whether you're going to enter your buy or sell. So there's a center line which you use on the indicator at the 50, at the 100% level. Yeah, it's not 100%, but 100 level. So if the price is above the 100 level, you're looking for a buy. If it's below the 100 level, you're looking for a sell. And this momentum indicator, you can as well use it. You can use the momentum indicator or use it together with RSI. Even RSI will show you the same levels or the same information, but for the RSI, you use 50 level. For the momentum, you use 100 level. So we're going to look at possibilities of the two. This is how you look at it. So for the momentum, if you look on the rightmost side, we have the 100 level. This one here. That's what's going to help us know whether you're on a bearish, to confirm the bearish momentum or bullish momentum. Like in this session where the price crosses below the 50, this one here indicates bearish momentum. And if you look at the price right from the top there, you see the price went down. At the same point, we're moving from the right to the left. At that section where the momentum crossed above the 100 level, indicating upward momentum, and what you see on the price, it's lifted up to a bullish move. And we can cite several cases, like you can see here as well, momentum above 100, and the price lifted off a support level. So very strong move high. And this is what we are looking to be in line with our trend or the break of a trend. If this momentum can confirm or can help us confirm this upward move, then in the event that we have a change of a trend to the downside, this should help us to prove even more that the price is either moving to the upside if the break is to the upside, or moving to the downside if the break is to the downside. That is what we are pursuing in this case. That's why we are adding the momentum. So how are we going to apply these tools to trade? All of them must confirm the same direction for you to enter a trade. You might even decide to have a checkbox on whether the three indicators that you're using have confirmed or have aligned properly, or they have given you a confluence. So for a buy conditions, you want to see a trend being broken and the price closing above the trend line. In the same case, the moving average is to confirm that upward move as well. The 9 crossing above the 30. So in this case, if you have a trend like this, the candlesticks, you want to see them closing above. As the candlesticks close above, then the moving averages as well, you want to see them crossing over also to the upside. And this is the scenario you want to see. And then to confirm these conditions which you have here, the momentum on the lower side with the level 100, you want to see it also crossing above to the upside. And this is going to confirm your buy. Right? That's what we need. And all these conditions, you need to wait for all of them to align. If you have a crossover to the upside and the trend is not yet broken, even if the momentum points above 100, it doesn't confirm. So all these conditions, all of them must be met. 1, 2, 3 must happen. If they don't happen, then you want to sit on the sidelines and wait for a proper setup. Here's an example of what we're looking for. So an advantage of using this strategy is you can use it for a breakover trend or even continuation of the trend. We have included this continuation of the trend to help traders filter out fake breakouts. We'll consider the most left, and in this case, you realize we have this area where the price touched on the trend line, didn't break to the upside, fell lower. Initially, the red moving average, which is the 9, the faster one, crossed up, but on reaching this resistance level, it fell to the downside, which means it's just obeyed the trend moving to the downside. So if you're looking for the break of this level, break of this trend or further upside, then it fails with the price falling back again below the trend and the crossover again to the downside. If you check down, you realize that the momentum went below the 100 level, and that confirms continuation of the downtrend. Could have been a sell, so no break of a trend. Second attempt here, price attempts across to break above the moving averages, doesn't even reach the trend, falls back again below the moving averages. We are in line with the trend. It's a downtrend. You check down there, the momentum is below, still confirms downward move. The third attempt here again, price falls below, momentum falls below, downward momentum, selling. The break of a trend happens on the third touch here, which we have highlighted in this case. So how do we confirm it's a clear break of a trend? The price breaks above the trend line, where you have 3 touches that did not break the trend. Here, the price broke to the upside. The moving average is crossed over to the upside. At this point here, if you look on the momentum, it also broke to the upside, maintained above 100. And this is what signaled the start of this upward trend. So the advantage of this strategy is you can use it to ride the trend or wait for the break of a trend. If the break of a trend is not confirmed, then ride the trend. And for a bearish setup for sales, again, our 3 conditions have to be met. In this case, wait for the uptrend to be broken. There's a trend line, 1 touch, 2 touch, 3 touches. Let the price break the trend to the downside. Condition number 2, your moving averages cross over. That is, you have the 9. So if this is your 30, then the 9 should cross over, should be the faster one, until the price falls below all this. The momentum indicator falls below the 100, confirming the bearish move. And here you have a sell setup for a break of a trend. There is something I've not highlighted previously, and I want to make sure I highlight. So you want to use a higher time frame setup. But the problem is when you're using indicators, if you keep moving from a higher time frame to a lower time frame, they might give you a wrong signal, because a crossover on 4 hours is not going to be the crossover on 1 hour. So it might be advisable to stick to 1 time frame, especially if you're using the crossover aspect, so you can get much clear setup. So let's look at a clear setup of a sell on an example captured on the chart. And here we have, again, 1, 2, 3 setups. This one can help you to ride the trend in the event where you are looking for to to filter out a fake break. This break didn't suffice. This one again didn't hold. It was just a candlestick, and price went up above the moving average. The trend was not broken. Momentum maintains above 100. That's how you maintain the trend. So you can ride the trend with this setup. And again, when the trend breaks, like in this case, candlesticks below and maintains below the trend line, crossover below, and the momentum falls below 100. And this is on 1 hour time frame, right? And here traders get a very good sell. Remember again, if you want to do several time frames, you might have different setup from this. It's good, especially if you're using indicators, try to stick to a time frame and not a very low time frame, a higher time frame to get clear setups. That might be a little bit much stronger than lower time frames. After this, we want to check on examples on the chart, see what we can identify. If you have any questions, please feel free to type them on the chat so you can look at them towards the end of this session. Sharing my screen, go to 1 hour. Then this is gold 1 hour. Let's see on a possibility of such entry. So if you have a laptop, then there's a chance for you to know where to insert the indicators. Go on the insert section, visit the MT5, go to the indicators, go to the trend, then do the moving average. In this case, we do 9. Exponential moving average, select exponential on the method part, 9. I'm going to do red. Then click OK. We have our line there, that's our EMA 9. So this is the first one. I go again and insert indicators. The trend, select moving average. This time around I do 30. Give a different color, blue, I insert. This is what I have. You can see the blue is much smooth as compared to the 9. Okay. So in 1 hour, you can see it's been a clear downtrend. Yeah. So let me add the momentum indicator. Go to the indicators, trend, then go to the oscillators, and then select momentum. So for the momentum, you need to set the level 100 because it's not automatic, or just try to set it, can give a different color. So leave the period there it is, the default. Go to the levels, you add a level, you can adjust the red color so it can be clear on the chart. So if I add, I'll have something like that. So I need you to note that the levels where you had the price rejecting the or getting a rejection on the trend on the moving averages, moving to the downside, also the momentum indicated below 100 downward momentum. It was a sell in this case. So this is riding the trend with this one. But because we want to prove more of those levels, we need to draw the trend line. To draw the trend line, identify at least 3 touches. So go get the line. But before that, just get the touches. In this case, we have go to the objects and you can use the rectangle to mark them. We have this level. That's one resistance level. We have the other one there, another one. If you have 3 touches, you can fit in your line. Go select the trend line and draw it that way. Extend the line. In that direction. You realize the line might not, you can extend even previously and see there was a very clear trend. You can move along and you can see it's been holding on. So gold has been on a very clear, strong downtrend all the way from the top. So the trend might cut through some highs, leave others lower. But this one is a clear trend. And what has been happening is if you've been waiting for a break of a trend, in this case, then you may not have had a trade for a very long time if you're trading gold, for example. That's why I say this strategy, which is a break of a trend line strategy, is still something you can use to ride the trend. Like you realize anytime the price touches that trend, at some point, if you're using the moving averages, you'll be getting fake signals. That is a break of the trend on the moving averages, but doesn't hold. On reaching the trend line, it falls back. So if you're using the trend line, could have been getting good entries for a sell. Like in this case, gotten a sell here, but didn't go far. This event here could ride a trend to the downside. So there was no clear break of a trend here. We're still waiting to see, but you could be riding the trend with this one. At this level, there was a downward move. If someone was using this one today, would have gotten a trade at this point here. Let me just put a line so you can see. See that? With the candlestick trying to break this level, fails at the trend line, falls below the moving averages, momentum to the downside, could have gotten this one candlestick around several pips for gold, right? Maybe 50, something like that. At this point, we don't know whether it will break as well. But with this strategy, also need to be careful when you have news, okay? And that's where you might have a break of a trend, by the way. Just mentioning. Have we had a break of a trend to the downside before the start of this one? Let's see whether you could have gotten that. Not really, unless on 4 hours. Yeah, there was something on 4 hours, but my chart seems a little bit dirty on the 4 hours. Still, you can see at that point there was a break of a trend. Let me remove those other earlier levels. It's just showing the highs and lows which I had indicated. So let's see whether you could have gotten this downward move with a break of a trend. Do you have levels? 3 levels to show us the trend? Yes. The lowest point, you have a touch, another one, and another one. So what happened? Right at the top, you had the price breaking to the downside. Then we had a pullback a little bit, which didn't make it to go above the trend. Then it fell to the downside. That's why we had the start of this strong downward move. But this one happened on 4 hours. Yeah, happened on 4 hours. On 1 hour, would you have gotten the same? Yes. Still, we have it here. Very clear move. Entry to the downside. So what traders need to be also careful about is when you have a strong trend which has been there breaking, you might have a pullback just to prove that strong downward move. So long as it doesn't hold to maintain above the previous trend, or still doesn't break the previous high, previous resistance which was there, then you're still on the downtrend. That's why you are called upon to understand a little bit more about the market, not only one trend. In this case, if it was on 4 hours, could have been much clear in this case. We can still look for something else. Pound USD, could we have had something like that? Break over trend on 1 hour. Several cases here. So at this point, let's scrutinize this one. Did we have several touches? Yes. Trying to move the charts to find a clear setup. One, two, three touches. Okay. But again, the trend was very steep at that point. Could have gotten it quite late. The most recent touches that we had here, we're forced to use this. Remember, you do not want to stick to a very flat trend like this, even when the price is trending above the moving average, is a little bit steep. So you want to readjust a little bit to the current price movement. So in this case, there is this touch, 2 touches, 3 touches, and the price broke at this level. Again, there's something that is repeating here. See how the price, after breaking to the downside, the crossover to the downside, price falls below the trend, as you can see. But then you have the price pulling back again, but doesn't break the previous high. Where was the high or the resistance? This level here. Falls back again below the moving averages. And that's where, if you check down, you find the price falls, the momentum falls below the 100. So traders, please do not wait for an exact replica of the textbook examples that we have, or the best examples that we give on the presentations, because the price does not really follow exactly the same setup that we have on books or on presentations. Yeah. So these are breakover trend, but then we had a pullback to retests, price trying to resume back to the trend, but doesn't maintain above the moving average for long before it falls back again. Yeah. In this case, you might have also looked at another possible trend, which was broken there. The price went to the downside and you had a very strong downward move. Again, for someone who was looking at this part, this stretch here, we have something like this level, a downtrend which is getting weak. Yeah, downtrend getting weak. At some point here, price broke to the upside above this small trend, crossover to the upside, momentum to the upside. So all this pointed to a move of around 100 pips. Not bad as well. So if you're not talking about this one, then another level here, break to the downside, momentum to the downside, and you get it. So what you have to be careful about is if you start moving lower to smaller trends like this, then be careful, because you might be playing within a bigger downward trend, like you can see here, right? This one comes up very clear that now you have a bigger downward trend that the price is playing within. Another thing is, if you wait for the bigger trend, now this one, to be broken, you might stay for long before getting those ones. So you might want to see smaller breaks of a trend, still with the moving averages and playing around with the momentum. And you can apply the same concept on a wider scope, on a short-term scope, and make some profits. And Pound USD gives us how you can trade the break of a trend within the bigger trend that we have. Still the same rules apply. Wait for the crossover, let the price break below the trend, and confirm with the momentum, either falling to the downside in line with the trend. That's okay. Even something better is if you can find a broader downtrend and wait for breaks in line with the trend, then you're much better because your odds are much higher. Okay, this is a broader downtrend. Then you have got a little bit of a price going to test the level with a small trend forming here, short-term trend, falls to the downside, momentum confirms, then you have trades which are coming up in line with the trend. It's another way of riding the trend, right? As I'm waiting for your questions, you can still look for another setup, maybe something with that doesn't have USD. Pound New Zealand, let's look. Possibility of setup. 1 hour. I'm now tempted to go to a higher time frame, but no. Sometimes you might not have an uptrend or a downtrend. You might even have a move like this. Again, you're moving away from the textbook setup. Here is a consolidation, sort of a consolidation. But look at how the price maintains an upward. It's just above the moving average, is a consolidation, sort of, but then breaks to the upside. It's a very steady downward trend here. At the point when the price breaks above this trend, which was not being broken previously, and if you consider the history a little bit, you realize this is an uptrend, which is turning into a consolidation at some points. Consolidation then springs to the upside, right? So in this broad uptrend, which I had noted before, 1, 2, 3 touches. So if you were to ride this trend, then you would consider these smaller sections where you have a trend coming up, it's broken to the upside. This small trend within this broader trend, a smaller trend here, a minor trend, if you can call it minor. The price breaks to the upside, rests above the moving averages which have crossed to the upside. The momentum is to the upside. And this one gives, right after this session, gives an entry to ride the broader trend. So there's a break of a trend line within the bigger trend, right? In this case, as well as this session here. So this is a setup. You can look at it in different ways. If you are in line with the broader trend, in this case, it's an uptrend, and you're getting breaks like this, which you're looking for, it's another version that you can ride this price movement in a very nice manner. Okay, so this is an advanced approach where you're not only waiting for the trend to be broken. If it's a bigger trend, you can look for minor trends which are forming in the charts and exploit them using this strategy. Okay, now here comes another question, another challenge. If you look at this, and you have the broader trend, actually is doesn't want to work because it will give us something very steep. If I try to move this one to give us something very steep, if I try to force it, it will give us something very unpleasant. So what you would do is get something like that. So if you cannot get a break of a trend, does it mean you can't trade with this strategy? This is where you bring in the aspect of price following the trend or riding the trend, so long as the price jumps above, where is that section now? It's gone. The price jumps above, the price bounces off the trend line, doesn't break it, despite having remained below the moving averages, right? Price is up above the moving averages, they cross over, and right at this level here, moves above the moving averages, they cross over to the upside. If you look at the momentum on the downside, it's gone above 100 level. So you buy, how many pips? This could have been 180, targeting the tops. That's that. Price falls again to the downside. What you do not want to do is try ping pong in the markets, like eat from downside, buy from the upside, sell. Might not favor you. Okay, and those are the setups which I had for today, the examples. This one really makes it very interesting. Look at different scenarios that you can use in the market. And this is what we're calling the break of a trend line strategy, right? If it's a broad trend, do not keep waiting for that trend to be broken. Look for trends within that trend. That's actually going to give you good entries, like this case here, so to ride the market. So with that, I think I'm going to wait for your questions for maybe 2-3 minutes. If not, we will call it a session. Remember to follow us on our social media channels, right? And for our Twitter, the X, nowadays it's X. We change it a little bit. Yeah. So make sure you look for, let me confirm. For our Twitter page, let me show you what to look for. For the X, nowadays it's X. That's so you can get more updates on what we are delivering. Yeah. So it is at fxpesa_official. And on these other pages we maintain, so that's how you can see our updates. So if you want to see more of this, like this session which you've recorded, it will maintain. It will be posted on our YouTube. It will still be there. You can revisit at your own time. So follow us on these social media channels, and you have more updates. Hey, Alvin, and you're asking, is break of a trendline strategy similar to break of a channel? Good question. Maybe I would answer, what is a channel and how does it resemble with this one? If we're talking about a trend line, in this case, let me use the chart, by the way. If I look at this broad trend line, this broad uptrend, then if I join the upper parts, then I'll have a channel, something like this, right? If on these internal trends, if I try to look at the lower side, then I have a channel. Same case for this one, right? So yes, It can as well be the break of a channel, right? It depends with which side are you looking at. Are you looking at the break of the upside, right? Or the downside? So it can be the break of a down one channel or an up one channel, just the same. Just make sure you don't lose the rules that we are applying. So yes, it can be. Any other question? So traders, thank you so much for your time. It's been a whole 50 minutes of us reviewing this trendline strategy. All the best. You can always revisit this presentation on YouTube for much more detailed speed. 45 minutes. I've been your presenter, Matthew. See you next time. Bye.